Morning here. It's 20 before 9 at your 105.7 Light FM. Good morning.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
All that means it's time to double check and see what's going on with your money on Wall Street this morning. At a 3-day weekend to play with after a pretty doggone good Friday. What's going to happen this morning after we had a chance to see what could possibly get messed up over the weekend? Philip Statler from Statler Financial Services in downtown Sebring on the phone. Philip, good morning. How are you?
Good morning, Dave. Hey, doing well. Had a good weekend. As I told you on Friday over in Venice, I got to enjoy a little birthday time with my granddaughter. It just turned 2 today is actually her birthday. So, so some good times over there as now we're back in the saddle for a little while before we take off on another big family vacation, but that won't be until June. So we got a little time to go for that.
Sounds good, and we seem to be doing okay in the marketplace during your absence. On Friday, we ended up with, I won't say a barn burner day, but it was a solidly positive day. The Dow was up 294 points. S&P was up 27 3/4. The NASDAQ was up by 51, and the Russell 2000 added 0.9% as well. That was actually the biggest percentage gain of all of the major indexes. Dow, a new record on Friday, and the S&P, NASDAQ, and the Russell are within one good day's distance of record closes on all of them as well. And I noticed when I was soloing yesterday that all of the indexes tailed downward at the end of the day on Friday. We have very well-trained investors to take a little money off the table because heaven only knows what kind of mess can happen over a weekend, and they're kind of learning to take at least some off the table just in case they can't do anything if something weird happens on Saturday, right?
Oh, that's right, Dave, because, especially this weekend, right? It was a long weekend. So that gave you another day that something could go wrong. So So anyway, and we did have some, some extra little curricular activities going on from a quote defensively standpoint on Iran, and you got Israel doing a little bit of bombing. It looked like over the weekend as well.
Yeah. What's a few bombs between friends, right? Yeah, when I woke up this morning and they were covering on the news that we had lobbed some missiles into Iran, taking out some more missile positions, we were calling that a defensive maneuver. But anytime you start lobbing high explosives around, I start getting a little bit nervous about what that's going to do, not only to world peace, but what it could end up resulting in our markets for the day. But evidently, everybody's saying, well, hopes are still high. We're still close to an agreement with Iran to be able to make this conflagration end. And everybody's in relatively good humor this morning on Wall Street, it sounds like, right?
That's looking like it. At least looking at the current futures outlook, and it looks pretty good. Looking at the interest rates are dropped. 30 years still above 5, but just barely at 5.01. The 10 years below 4.5 now at 4.48. So we're seeing some relief there, though. Mortgage rates, I think, are still pretty high. A matter of fact, Dave, I was looking at an article that Fox Business had out today that talked about how housing in Tampa is one of the 5 markets that is really getting hammered. Tampa St. Pete is right behind Phoenix, Arizona area. They're seeing price listings with price cuts. 25% of the listings have cut their prices, and the year-over-year price has decreased by 4.2%. So we're seeing definitely some pockets having some issues. San Antonio, Texas, Denver, Colorado area, and then the Portland, Vancouver, Oregon, and Washington State also having some issues in the real estate market.
And all of those markets are ones that I remember about a year and a half ago were on the highest accelerating price values list as well. Tampa was right at the top of the list in terms of rental charge growth and property value growth. Well, what goes up got to go down, doesn't it?
Well, yeah, eventually. So we're seeing that, and let's face it. I mean, even here in our local market, we're seeing things stay on the market longer before they close out, and we're seeing some price decreases as well.
Yep, I've periodically said I feel incredibly fortunate to be living in a relatively, and I say relatively stable area. I kind of watch the value on my home. It's only about a percent and a half off of its peak in terms of value right now. So yeah, we're fortunate to live here. We're relatively, and everything being relatively stable around here, at least as far as existing homes are concerned. Talking about the markets in general, I got an interesting report out this morning. Earnings season is kind of drawing to a close right now. The big names have almost all reported. We got one this morning that folks will recognize, but they're starting to do the post-mortem on earnings season. This I found interesting. Earnings growth in the S&P 500 is tracking up at 26% year over year. That's the biggest growth in earnings since 2021. That's out of Bank of America. Given the fact that for almost 2 years in here, we've been looking at and urging people to compare year over year absolute numbers in terms of earnings, we're finally turning the corner and actually making a little bit of money on the publicly traded stocks, which puts a little bit more ease in my mind when I get so concerned about the multiples that are happening on the major indexes. They're still sky high, but at the very least now the earnings are starting to come up now to match the growth on the price of the stocks.
Yeah, and that's good to see, because it would definitely, we need to close that gap for sure. I did find this little tidbit. Ferrari, the big sports car company, getting hit a little bit. Getting hit a little bit this morning as they have launched their first fully electric vehicle. Yep. So the industry is not liking that, or at least the analysts aren't liking it. It's down almost 3% this morning. But somebody said, I think it was one of the analysts came out and said, it's a cross between a Toyota and a Honda. I thought that was pretty good.
Except for the price tag. You know what they're going to be asking for it?
Yeah, what they say?
$640,000 for an EV. I saw that article and I darn near dropped my false teeth. $640,000 for a car that's going to get maybe 200 miles before you're going to stop for a half an hour and charge it.
Yeah, I got to think. It probably won't get very far. The distance is not going to be much.
No, you aren't going to win many high-speed chases if that's your fantasy with that, because you're going to run out of power before the cops get bored. Morning. Earnings season is pretty much on the end. We do have a couple of economic reports coming out. I suspect the Conference Board consumer confidence number that's due out today might very well weigh heavily after the disappointment we had from the Michigan consumer confidence reading at the end of last week. That's due out a little bit later on today. Then we get a little bit of a break, but we're going to get a gross domestic product and a PCE inflation reading later on this week too, aren't we?
We are, Dave, and those will be some numbers we definitely need to be paying attention to see what those numbers are looking like. Remember, GDP will only be the second revision. There'll be at least one more revision going forward. Like you said, earnings season is slowing down. I do have one stock that everybody will recognize, and that's AutoZone, the automotive parts distributor and retailer. They had a so-so quarter. They kind of split the baby there. We had missed on revenue by just a little bit, not much at all, but still a miss. And then quarterly earnings were above expectations, came in at $38.07 versus $36.22 expected. But here's kind of the fly in the ointment was when they looked at sales, and they said that international sales have been challenging in the most recent quarter, even though domestic sales continue to do very well. But that seems to be hurting the stock this morning, down 5%.
It gives me pause. I'm wondering why there'd be so much different between international and domestic sales in an auto parts store. That's kind of interesting, isn't it?
Yeah, it is. I'm not sure what made that difference happen either.
Yeah, I honestly don't know the business well enough to be able to surmise what might have caused it, but I find that a fascinating difference. I'm kind of out of other tidbits. Shall we set the table for the morning?
Sounds good to me.
Let's do it. Barn burner, or at the very least, a darned good day on Friday. Took 3 days off. International events intervene and made us all a little bit nervous, but it doesn't look like we're going to be too worried this morning. 45 minutes early. What are we looking at?
No, we got a lot of green ink on the index side. The Dow's up a half a point. The S&P 500 is up 3/4 of a point, and the Nasdaq 100's up a little over almost 1.25%. Russell 2000's up a little over 1.1%. So a lot of good numbers there. On the other side, we've got silver back up about 1/3%, gold's down 1/10%. Crude oil, Dave, you're going to like this number, down 4.25% right now to $92.51 a barrel.
Yeah. Of course, I filled up at the end of last week when it was still sky high, so my timing is not all that good. Looking across the various ponds, because we were quiet yesterday, they didn't have anything to go on to build any enthusiasm, so the Asian rim markets were mostly off this morning. 6 a.m. closed the mainland Chinese market. One was up by 0.1%. The other one was down by 0.2%. So you can call it net down to flat. Europe is generally really mixed. The German and French markets are down. Most of the rest of them are up, but Germany and France are two of the big 500-pound gorillas, and that weighs the average European index down by about 0.25% halfway through their trading day. It's kind of weird. Everybody else is up, and those two are dragging the markets down over the European community. Getting my retirement together so I can turn my dreams into plans. I need your eyes to help me do that, Philip. How do I find you to get it done?
Then give us a call 863-382-0037. Schedule 30 minutes. We'll walk through where they are, where they're trying to get to, and see what they need to do to tweak things to get there. And then they can catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And us back again together tomorrow morning about the same time. I appreciate it. You have a good day, my friend.
All right, buddy. You too.
Be well. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks. Hope you guys had a great Memorial Day weekend. Glad you're with us today. Take care. Join us again tomorrow. Bye now.